What's up YouTube, it's Louis here. I'm back with another Bitcoin update. We're going to look at this key resistance here today, 21.7k. If you remember, while we were at the beginning of this range back in mid-June time, I remember telling you guys, looking at this W pattern over here, everyone's focused on this as the neckline of the W, but it was actually this wick, 21.7k. So that was the resistance we were always looking at going forward. And we had that little fake out where we did go below. This is where the bears did take power by closing below the 20. Getting rejected by the 55 and closing below the 20 is a very bearish statement, meaning we're coming for this low and this low. It means that we should make a lower low, lower than 17k, and you didn't. You held the golden pocket as support, creating this reversal wave. If you haven't watched the videos yesterday, go watch that. Basically explain how this impulse retraced into this and should have continued down, but eventually created the reversal wave, confirmed the previous resistance as support, and then made that higher high. All we're doing is retracing back to this low. After this impulse, we were retracing back to that low, and we've met that, and we have not made a lower low. So that's very positive that we have not made a lower low. We actually have made a higher low. As explained yesterday, this wick here has not been lost. Once you lose that, then you've got a lower low, and still you need to lose 20.2k. So getting rid of these fibs. And by the way guys, by holding, before we move on, by holding above this gold pocket here, you have kept valid the 1618 target of 27.8k. That means we should still anticipate Bitcoin rising up to 27.8k, minimum 25.25, but we've already done that basically. So as long as we can hold above 20.2k, which is over here, and I'll show you in a minute why it's exactly that, yeah, that is our target as long as we're above 20.2k, which we are because we're at 21.7k. So if I zoom into this area, what do we need to close above to actually start heading up? We need to see a close above 21.7k to start heading back up to this low over here. This is the next level that we want to reclaim. Remember, if you've been watching over the last few days, you know that we want to reclaim these EMAs because these are now key resistances going forward. So even if we do pump here, what the EMAs are just saying, if we only relied on the EMAs, which we do not do anyway, but if you were just relying on the EMAs and nothing else, no drawings, no patterns, no trends and whatnot, this, you are under this and it's now resistance, so you should get rejected here and put a lower low. That's why we have this target prepared here, back down to 18.6k, because as previously spoken, since around up here in this area, before I went on holiday, I spoke about this M pattern, which eventually became valid. First of all, it only became valid because you closed below this. We could have just bounced off here and continued up, then this would have become a W pattern over here, but you validated the M. This is why it's always good to prepare for both scenarios. And then you've come down, and I warned you, okay, now you've come down, you could form a bigger M like this. So that target is prepared for you guys, back down to this low. And again, to stay bullish, I know I said 20.2k, but you want to stay above 20.2k if in the short term you want to see 27.8k. If you want to see the 1618 in the short term, short to mid term, then you want to stay above 20.2k. But if we could still go down to this, that basically means in the short term you would not be going to the 1618. So if this larger M pattern is valid, how do you validate this larger M pattern? We need to see a close below 21.2k, this green line here. And so that basically means when you close below this green line on this red candle, you actually validated this target, meaning that the bears were in power. The bears should have pushed us lower, and they did not. So this, when I tell you guys, oh, the bears should have done this, this means that the chart should have done this, and it's not doing that. It's showing you, or you need to be able to pick up, that means that the bears are not strong enough to do what they should literally be doing. It should be easy for them to do. You're getting all the bearish signals, but you're not doing the bearish thing. So does that mean that the bulls are here? This is what your thought process should basically be. So at least in the short term, while this support is holding, we need to, and this low over here is holding, we need to take this as support. So if you appreciate that, like the video, of course, subscribe if you haven't already, and leave a comment and share the post, share the Bitcoin videos on Twitter. Please retweet them, or just tell people to go check out the channel. That'd be much appreciated. So what we want to see for the bullish scenario, get above these EMAs and continue. But what the EMAs are solely saying is that this is now resistance, because we never formed the bullish cross. That means all the bullish crosses on the alts are fake. But again, let's look at quant. Quant is a nice market leader, so if that's constantly making higher highs and higher lows, I'm guessing the rest of the market will follow, and that will be seen on the Bitcoin chart, which we are seeing at the moment, because here we have a low, here we have another higher low, higher than the previous, higher low, and again another higher low. So no lower lows here, apart from, you know, saying that this here is lower than that. But yeah, looking at the key lows of each move. So when I look at the chart, I'm looking at these moves. This the high, this the low, high, low, and all the way to there, high, and then all the way back down, low. Basically, this is like a mid support. But yeah, if we're looking at the entire move, this is the big move, and this is the retracement, but you retrace all the way back down. So that's not the best in itself, because you're meant to hold somewhere in and around here as support to go up and continue. But as long as we can now remain above this wick over here, 20.7k, as well as 20.2k, and I'll just show you that now. As long as we can remain above those numbers, then we should continue to the 1618. And once we meet this 1618 target, do expect a dump, wherever it lands. If we can again hold above this, so let's say we had this nasty crash all the way back down to 20.2k, all the way back down to here, you'd still keep this 30 to 35k target valid, so you could fall back all the way to 20.2k and still go all the way up until there. So yeah, that's probably what's going to happen on the much larger time frames. Look at where the 200 daily EMA is. So by the time you start creeping up, it's going to be in and around these targets. So expect a big reaction from there, because even if you're bullish, you need to expect massive resistance going forward from the 200 daily EMA. So yeah, that's going to be in around the 1.272, the 1.414, and the 1.618 by the time you head up there, and that's only if you can get above these EMAs and confirm them as support. But everything we're doing right now at this golden pocket of support is bullish, because as I'll show you right now with the fibs from the low to the high, these are different fibs. This is a fib showing you that this move over here is the impulse, and this here is the retracement, just like that. So with that, you need to hold the golden pocket, the 0618, and that is 20.2k, basically almost 20.2, look, 197. So we'll call that 20.2k. That is the level that we want to stay above going forward, because if we do not, and we confirm it as resistance, this golden pocket, that's when we come down, retracing to this low, to the technical target out of this large M pattern over here, like that. And of course, if we're losing this low, that's when I'll say, guys, we're not done. We are actually making a lower low. But you're not seeing any of those signs right now, so why would I even be talking about them? You know, I'm preparing you, but there's no reason to actually say, yeah, that's 100% happening, when you've created the reversal wave from this fib over here, from the high to the low. We had this golden pocket here on the previous fib, not this one, but then we created that reversal wave, because this over here should have been resistance. You should have made the lower low. You didn't. You found support on it right there and made that higher high. So you just retracing back to that low, and then looking at the new fibs with this impulse over here, this whole move coming back down into the golden pocket. There's no reversal wave here. The reversal wave here is when you break below this golden pocket and head down. But what should happen, just like over here, what should have happened here is this impulse, as we saw, this retracement, and then this continuation with the low low. And that's what should have happened. The bears were in power, the bears were in control to do that, and they could not do that. So that should tell you guys how bullish this is. You created the reversal wave. That means you're not going down, you're going up. Proven. After you found support, you made a higher high above this right there. So you don't need to do, hold above this golden pocket and you stay bullish, because you completely changed the trend when you found support here. You should have never got above this gold box right there when we pumped here, and then you found support on it. Absolutely amazing. So that's pretty much it. Again, I can prepare you for bearish targets. You can see them down here, but yeah, not going to happen at all if you're holding 18.6k and of course 20.2k. Thank you guys so much. Like, subscribe, and comment. If you want me to teach you how to do this, it's all in my course that's available on Twitter, Louis_crypto. I also have mentorship, but I've only got one slot at the moment, so if you want that, get at it as soon as possible. Thank you guys.